Sue, so this happens every time, doesn't it? You go off for a long walk, and I remember many years ago, you went for those famous long walks and came back to me, and he said, "Been for a long walk, Dave," and I go, "Oh no, there's an idea, isn't there?" But this idea, I have to say, is probably your finest.
That's good news, because most of them, we have a book of ideas, and I tend to get a big cross put through some of them, or some of them are put on hold. But this was definitely an idea that was one of the better ones, I think you said at the time. And as we came to last year, celebrating 10 years of the family business community and everything that we do for the family businesses that are part of the community and the connections we've made over time. It was, how can we give back to a sector that we've championed and had so much belief in for so many years? And part of that was, we also had family business leaders or people who are owners of families who had also come to us over the period of time and said, how can we support, how can we give back to the family business sector? So what started initially with an idea of bringing together potentially a foundation to support the education of the next generation, which is definitely one of those ideas that's on hold. But
you mean commercial education?
And also if they were going on secondment to educate and develop themselves, and then how would that gap be filled within the family businesses? So that was the first part of the plan of the idea. But we looked at that, and that was what we actually thought we would form, and how would that develop. And then last year, we had the pleasure of meeting David.
So welcome to the team, David.
Yes.
Pleasure to be here.
Yeah, you're now in it. But I think this is where the real connection, when we started talking about developing a fund, really come to the fore. And I think, in fact, you probably coined this actually, when we started talking about this fund and what we wanted to create, and having some of the larger families giving back and supporting some of the others within our community, that we really wanted to create a legacy. And I think you reached the point, well, that's the legacy fund then, isn't it?
It's not actually a fund. It's matching the high net worth client, we call it client, the high net worth investor that you described, that wanted to give back and had been very successful, matching them, or the direct investment with the family businesses. And the thing that struck me when you were explaining it to me is that it's not something which, it's not an area of private equity investment, isn't family businesses. The main private equity funds do not focus 100% on family businesses. They might spot the odd one, but as a general rule, what private equity investment does very well is it sees an opportunity and it invests for a finite period, for 5 years, 6 years, 3 years, and then it exits and it makes a profit for its investors, who are invariably institutional pension funds who sit far away. And the culture that surrounds that for the businesses, it's high growth and it's a booming sector. But I think there's a whole almost other industry to it, and family businesses have the need for capital, risk capital, equity capital, as much as any other business, very often to sustain their legacy. So it was flipping around the normal private equity investment to what you were explaining, and saying, actually, I think you're coming on to something here, because there are not immediate access to equity investments for family businesses.
Well, I think it's from the seed of an idea to then, as we always reference to, the power of three, which is what we've now become, to actually create what is now defined by this legacy. And I'm still going to call it a legacy fund, because
absolutely,
as the brand
it's
guy,
the FamBiz phrase for it.
Absolutely, sort of in terms of the name for it.
Well, it needs an identity. It needs a home. And that's,
Yeah, no.
So,
it does, yeah.
and I think it was really important, I think, as the idea developed, for what we were looking to do. I think, as you always say, you know, the pieces of the jigsaw suddenly came together, because exactly what we wanted to be able to help, not just we wanted to help the family businesses and support the sector, but also support those who have come to us to say, well, how can we be involved, and how can we give back to the sector?
Yeah. Yeah, so I think that's what I liked about it. So you get a scenario that not only does the family business that's seeking what's often referred to as equity gap funding, maybe talk about that a bit further later, a bit further on, but they're seeking an amount of investment to take them from A to B, which is all part of a long-term plan for the family and the business. But what also comes from that is all the additional knowledge and all the qualitative as well as the quantitative that is available within the community. And so you end up with access to not only professional investment management and equity investment, but you also access years of experience from some of the funders to the businesses.
This is a key point with this, isn't it?
Years of their experience.
Absolutely, because and that's what we found, I don't know, quite unique. I think that this is about sort of an investment coming towards the business, but more importantly, the skill set and knowledge and experience. We always talk about knowledge transfer,
transfer.
So that knowledge transfer brought in to those families, to whether it's to directly sit around the boardroom, the breakfast table, as we often refer to it, but that table to help and guide that business. So it's a family to family with an investment over a long-term period is what we're discussing here, isn't it?
Yeah, I think it was really interesting because you used the term, is it patient capital?
Yeah,
I like that.
It's quite popular now, though.
It is. It's a real, but for us, I think, you know, it's everything. We have as we call it, our lexicon for family businesses. And actually patient capital, it really fits with that, because it's that longevity and that long term. Yeah,
and that's absolutely... The characteristic of patient capital is it isn't driven by short-term, short-termism. Decisions are taken for longer term in strategic plans, when obviously that's a big factor in other equity investments. But irrespective of what might be said on the way in, you know full well that there is a legal responsibility for them to exit their funds and return funds to investors and to the institutions who are invariably pension funds. But there's a lot of high net worth, sophisticated investors, high net worth families out there that want an allocation of investments to private equity, but aren't necessarily interested in a 3 and a 4 year term. They're quite happy with 8, 10 years, and realistic returns that fit with the growth trajectory of of a family business.
And because I think what was really important to us as well is, you know, we've built the community of family businesses across the UK and beyond, but we wanted to make sure that there's something that the family businesses who are part of the community have got access.
I think it's a game changer. Yeah. That's why I love the idea. I mean, there isn't a community out there that there's empathetic viewpoints, aren't there, between families?
Yes.
That they all have similar issues. They want to share knowledge. They all currently can face attacks, not necessarily from political quarters. They've got challenges of generational issues, etc., which is what the FamBiz community rests on. But to be part of one, and then also have access, if it's correct for the business and the independent investment committee agree, but to have access to a conversation about funding is a real game changer. And then you add on the mentoring side or the objective additional view from a family business success story but it's not part of your own business. Yeah, it's sometimes easy to take advice of somebody else's mother or father than your own, and that can be easier communicated across, or vice versa.
I mean, talking about the mechanics of what this is, and I think also the criteria, what could it be used for? So when we talk talking about sort of this investment. Well, are there limits to how I can use the investment? So what is the criteria for investment, first of all? What we're looking at?
For looking at this from the point of view of the investee company, so the company that is receiving, the family business that's receiving the investment, the criteria needs to be that the fund doesn't invest in businesses which are too small. There has to be a perceived risk and reward and a calculation. So the business needs to be on a growth trajectory, and we always say that a family business, any business really, but a family business will invariably require capital to support either sales expansion, operational development, or people. Those three are always integrated. We know, but it's sales, operation, and people, and capital supports the development of those three areas. So that's the story. When you talk about the criteria, there's got to be a story around, okay, we need this money. Now, that for a family business, that might be change in generational control. Yes. And we talked about the kitchen table. Yeah. The recent developments from the budget means that conversations which normally really happened around the family kitchen table now also need to happen around the share capital table as well. Because previously it was so much easier just to leave things alone. So if shares are moving around, there's value to that, and there's a lot of considerations around that. So it can finance that change in generational control. But what also happens is it finances the next generation taking a business a step further. New markets, moving to e-commerce for a crude example, something that is requiring capital to make a step change, where debt provision has a limit to where securitization of that debt with personal guarantees the family get uncomfortable with, and that's what they call the equity gap. So it's the gap where that needs funding patiently, where you're not paying huge capital resums. It's an equity instrument. So the criteria would be a solid business plan, a stable management team, and a story that can be communicated to the investment process, the investment committee, which ultimately makes the decision. However, this is where we are. This is where we'd like to be. This is actually how, in the future, the funds invested can exit. Now, that might be through debt, or it might be through profits made, and it might be through sale, but actually sale might be completely off the table. This business has been around 100 years and it intends to be around another 100.
Absolutely.
And we need this capital to fund that longevity around sales, operations, and people. And so that's really the criteria.
And I think it's really interesting with that story with the sales, operation, and people, because there are, with other funds and investments, and there can be some criteria where it has to be more on equipment or something like that. It's not, and that's, for us, that would be seen as a barrier, whereas this is,
it's where that story is. It might be a new warehouse. It might be an expanded warehouse. It might be IT system.
How many businesses do we know right now that are actually looking for additional space, capacity for more space? And the fact is that they can't have literally next door. They're having to find a new location to expand the business, which is, it's encouraging, but the blocker is getting the sort of the money behind it as well.
And I think the power of this is because everything that we do as being part of the community is that connecting with others, and actually what we're doing here is we're not, there's connecting the family to family, it's connecting, bringing in, it's growing the advisory and the information and the access to advice that they can get as sort of as part of it, which is really key. Yeah.
If we look at the issues surrounding sales, operations, and people, we keep using those three things. There are certain elements to that which family businesses will find a common theme, where the mentoring and the support, be it FamBiz Advisory or the mentoring from the investors that are involved with this, can assist. So there are common threads, for example, on the people side, the obvious one.
Yeah.
But what you'll also find is common commercial threads across those three areas, where you might find there is a business which is wanting to grow from X turnover to Y turnover in new markets, and we've got a successful family business that might be a downer generation that opened up new factories overseas or did X, Y, and Z, that has been there, seen it and done it within sales. So that's what the money's for, and that's where they're going to really focus their additional support, as well as the qualitative and socio-political family issues. It can be very specific to the commercial scenario, but essentially the funding is there to facilitate that. And so criteria, where you will have a criteria, is the investment amount per company will be between 500,000 and top out about 2 to 2.5 million. Sometimes it can go in 2 stages. So it might be $1 million and then a follow-on round when certain milestones are achieved of a further amount. But generally that's the investment amount which we're looking to focus on.
Yeah, and obviously a lot of the mid-tier market we work with, certainly within our families, I mean, it's a significant amount, but they have some big decisions to make in terms of what they need.
I know, and actually it is a significant amount, but those are the amounts that when we're talking to them as part of the work that we do with them, that's what's on the table. That's what they need.
And it can be very often combined with the debt provision.
Yeah.
You know, so there might be, well, we need 2 million to move factories or move warehouses or whatever, and the bank are very comfortable at 1 million, but get very nervous over that. And then our $1 million can come in alongside the bank, and that's just a hypothetical example. So you can mix and match it. It can be 2 million equity check and more. It all depends on the size of the business, and again, the quality of that story across those 3 areas, and so the quality of the growth story, the stability in the management team, and obviously the profitability. Less so much turnover, but more, what is the sustainable profitability that can underpin the risk and to reward.
As part, we get to know a lot of the family businesses that come to us through different parts of working with them alongside within the family business community. So some of the support, some of the areas that they need, that's what's, I think, so promising and like really fulfills the potential here, because there's our advisory of what we work with the families, but then we can start to bring other advisors in to help get them ready, almost get them legacy fund fit.
Well, as I said, the storytelling, as David said, I mean, that's everything about what we do.
Yeah.
Storytelling. So getting them fit and ready for that, then, the conversations can start.
Yeah, and so it's preparing the story, but then the investment case can sometimes rise and fall over the sustainability of the story afterwards. So it's not just getting them ready; it's that's why we've got about management team. How robust is that for the 5-10 years that this investment is going to be? Certainly, I say it might be less, it might be 3, it might be 5, but whatever it is, and each case will be different. And that's what's the flexibility of this funding approach is paramount. So it doesn't. Each individual investment is assessed and stands upon its own. Yeah. You don't have a fund that goes. Hence me saying it's not technically a fund from a regulatory point of view, because it doesn't have a set criteria that it must invest this much per this term and this, that, and the other. So, I think that's an important distinction between the two. Where the business is now, where it's going to go, and where it's going to keep going afterwards.
Yeah,
and that's when the advisors are really important. It's the mentoring from the friends, but who is who's surrounding that, which quite often can be our partners. Yes, granted, but
and I think as well. With that, similar to how we can connect family to family if there's things that they want to talk about, you've worked, and again, why all the pieces fitted for us is because your work is with family businesses as well. So there's other families, some of the, not all, but some of the families they could talk to them as well to get that sort of further. Confidential sort of what's happened, how it's gone, how did they find it.
Stuff
the peer-based is really important. Yeah,
is is really important, because I'm originally from a family business. So,
Yeah.
we talk about legacy fund. My granddad retired when he was 92. My grandma wouldn't let him, so kept him at work.
Grandma wouldn't let him.
Grandma, oh no, get out from under my feet. Yeah.
I was about to say, well, Grandad was the problem. Grandad obviously wasn't the problem.
I think Grandma was the problem there.
Yeah, no. One time, there was 4 of us, 4 family members, all in the same business,
Okay.
and so certainly can speak from personal experience when you look at when you look at family businesses and all that's associated with it. So, but I think, like you say, that it's the story going on, the story moving forwards post the investment, which is really key, and it's who helps them.
Yeah.
Yes.
With that, and there's different tiers of advice. There's obviously the FamBiz advice. There is the FamBiz partners, which are really important. So,
they always have been. Yeah.
Commercial action, legal reaction. Commercial action, taxation reaction. So you've got lawyers, you've got accountants, you've got structuring to do how the investment takes place. So all of that needs to be prepared beforehand.
And beforehand, there's the where FamBiz advisory comes in terms of there's the emotional conversations to have versus the rational as part of that whole process as well. Yeah.
Well, there's the emotional conversation throughout
the whole
all
of
this.
it. Yeah.
But I think we have. There is investment. We start before that. We have now got family investors out there. There is an investment fund. So there's two audiences, isn't there? From the community point of view, we've been focusing at the moment on the investee company and that criteria and the story and the 3 things. The other side is the high net worth family that want to give back, but they've made good money. Most of our clients, and they are clients, so we don't have institutions who are pension funds. We have high net worth families, multi-generational high net worth families that want to invest in businesses which they have a degree of empathy with. They've got similar values, degree of empathy, and it's not a black hole of investment. I just give my money to an investment manager and see them again in 5 years. Unless they're an official mentor of the business through what you guys are creating, they can't just go and knock on the door of the business, but they're fully aware of where their money's going, and they've designed their portfolio of what they want to invest in. So we sit with the family and go, we want to diversify our wealth, and we want an allocation into private equity, but we don't just want to give it to an institutional black hole fund. We would like to give back. We want, maybe if we had 10 investments, we want to mentor one of them, but we want to know what's happening with the rest. And that is a big part of the solution here for the community. Is that there are members of our community that have been very successful and are wanting to invest, and because it's not technically a fund, it has taxation benefits the same as if they own the shares in their own company. Yeah. So albeit it's changed with the last budget, 20 is still better than 40. So it's a way to invest their money in something that they are aware of, that they've been part of designing their own portfolio as a family, but they've got to be sophisticated high net worth investors, and they've got to go through the regulatory and compliance onboarding, which is not unusual for high net worth investment solutions, but that's so they go through their own onboarding process as a family. So they might do it with other families they know, but it's very bespoke to them. To that family, and you get that private, personal approach from the community. So I think we're striking a good balance between peer-based investing, like investment clubs that people talk about, and a bespoke solution to the member of the community we're talking about.
Yeah, absolutely.
And I think that's also what I really liked about the concept, that we can do both.
So I suppose that, in terms of the call to action, as we always say, but from a family, if it was a family business, it's either it's to make contact.
So they need to get in touch with the community and say, listen, I've got a story. I've got a story around these three things, and I think our family could do with investment, and
Well, I've got a story that I want to expand.
yeah.
Yes.
Yeah.
Yeah. Absolutely.
I've got a story as why I need investment.
Yeah.
And I think we're suitable, and I wouldn't prejudge whether you're suitable or not. I would get in
And I
touch with us and have the conversation. And if they're looking for investment, then we'll add value to that conversation anyway, won't we? Because there's going to be something that they want to talk to us about. So that's where I'd start for the investee company.
Yes.
And the investor, the high net worth family. That's get in touch with any one of the three of us, and then that has to go through the onboarding process to the regulated environment, and so they get assessed.
Yeah, absolutely. So
Got to understand the high net worth, etc., and design their fund, and then also interview them as to what they might be interested in from a mentoring point of view, where particular qualitative skill sets lie, so we can match them with the challenges of the investee companies. So it might be commercially technical, as I call it. So it might be, well, we put a new IT system into our business and we've been there, seen it, done it, learned everything, got the t-shirt, and we'll quite happily help you with that's part of your story. As I say, or it might be new warehouse, or it might be generational change, and then it might involve the socio-political as well, which is not the commercially technical, but my daughter used to annoy the hell out of me, but at the end of the day she was speaking sense, so listen to her might just be what the other person needs to hear. We've all been
it is that generational peerage is really important as well. So
Well, do you know what? On many occasions, actually, I'm just really pleased you went for that particular walk, came back.
So am I.
We had the idea, and look where we are now. This is something substantial that I'm really proud of, that we brought in to the family business community, and to enable more of those family businesses to just continue to grow and develop.
And let's be realistic. This isn't a high volume concept that you thought of.
Yeah.
So we want to be doing 2 or 3 investments in the community a year to start with, and we'd like to build up 20 to 30 high net worth families to invest in those. And as I say, they need to be sophisticated investors, high net worth. The family's got to have the liquidity and tick the boxes through the onboarding process. But initial investments from the family's point of view need to be around the 250,000 starting, and then can put more in each year and develop their own bespoke fund, but it needs to be around that. And as I said, on the investment quantum, I think we should be looking at about 500, or we are looking at about 500 up to
up to 2 million.
About 2 million.
Yeah.
On the side. And,
well, that's a good fit around where we're operating. Yeah.
I think it's worth talking about risk, because an established family business with a good balance sheet and a good story and a strong management team, from a risk profile point of view, all private equity is risky. If you ask your independent financial advisor, private equity fits in the high risk investment category. Yeah. It's illiquid, and you've got to be prepared to lose your money. That's private equity. It's the disclosure on your mortgage advert. You may lose your house that's the reality of private equity. But a lot of private equity funds are chasing that one investment, that one unicorn that's going to grow like mad. And the steady away, established, good balance sheet, long-term, patient capital investment can give good returns, which, the more that the equity investor makes, the more the family makes, remember. So it's good for all parties. And in a risk profile of equity investments, it can be very attractive and a lot more sensible of part of a portfolio bespoke to that family that's investing in it. So, and that's worth us all remembering here, I think.
Yeah, well, it's a generational track record, isn't it? It's not just a startup and we've got an idea. Do you want to get behind it? This is something that's second, third generation opportunity, great sort of long-term
I think it
business.
can fund, as I say, it funds those 3 things. It can be fund acquisition.
Yeah.
So it might be a business, that wants to merge. It might want to diversify into new areas, but
or grow their customer base.
But the established business is,
we've just had that conversation.
Exactly, and a couple of businesses recently have just done exactly that.
Yeah.
But the core business is established.
Yeah.
And other funds, the check sizes are too small. They tend to open their doors at about 5 million, and they're looking for businesses that are for sale very quickly. As I say, so that doesn't necessarily fit the patient capital, which is why I think if you're a member of the FanBiz community and you've got access to this, that's a real point of difference.
So we've launched the Legacy Fund. So how are people going to find out about what this is?
Well, we now have the details, which we've just put to coincide with this podcast, live on our fanbizcommunity.com, obviously on our website. It'll go to the Legacy page. There's a contact form which will come only direct to you or I, Dave. And that's again for confidentiality reasons. It won't go to the rest of the team. And then obviously we'll have an initial conversation, get some more information, and then start to then bring your team into it, David.
Yeah, and then if it's a company wanting investment, when we meet the management team or have a call and go through the story, as we said, and then if it's a family wanting to invest, then similar thing, just meet them and meet them with yourselves and go through that.
Yeah.
Well, everything we always say, it all starts with a conversation. So that's, how to get in touch is sort of either fill the form in or
it's nationwide
Dave
as well.
or
That's the other thing. So our community is quite big, isn't it? So since I've become part of the team, it's
you realise the sort of the scale
really is national.
The scale, no, we are. Our activity is across the UK,
and we do North West Awards, we do the Yorkshire Awards, but we're about to do home counties in the south.
Yeah, there'll be an announcement of a third regional
awards coming soon.
But there's a lot of businesses all over, our community is nationwide. So
we work on an advisory level across the country and also with our programmes, and we connect the community across the UK. So it's so this is for the Legacy Fund is for sort of families, businesses or investors across the country.